So many of them. This is just one of the strange places that these VWs are being stored all over the country, just waiting to be fixed.
So with that, the Now's Nicole Grigg with the good for the city and possible bad outcome for drivers coming with this unusual storage.
What if I told you there are nearly 3 million brand new cars sitting unsold on dealer lots across America right now? The global car market is facing a crisis like never before. Billions of dollars in vehicles are gathering dust. Dealerships are drowning in inventory and buyers are holding back. What caused this sudden freeze? And more importantly, what happens next? So buckle up, because this isn't just about cars, it's about an economic storm that could hit your wallet next. Stay tuned and don't forget to hit subscribe so you don't miss the road ahead. America's auto market. Crossroads, rising inventory, brand battles, and regional shifts. The US auto market is going through one of its most fascinating transitions in years, and the numbers tell quite a story. According to Cox Automotive's latest data, there are currently about 2.88 million unsold new vehicles parked on dealer lots nationwide. That's nearly 3 million cars just waiting for buyers. At first glance, this figure may sound alarming, almost like a looming market crash. After all, the number is 18% higher than last year. But before jumping to conclusions, it's important to put things into perspective. Back in 2019, before the pandemic disrupted everything from production lines to supply chains, inventory levels hovered around 4 million vehicles. Compared to that benchmark, today's 2.88 million is still below normal, though the steady rise signals a rapid recovery. What makes this surge even more interesting is that it's no accident. Automakers are intentionally boosting output, having learned a painful lesson during the chip shortage years of 2021 and 2022. During that time, dealer lots were empty, shoppers were frustrated, and those lucky enough to find the car they wanted often paid above sticker price. Determined never to repeat that situation, manufacturers are now building cars faster than people are buying them. And while that may seem like a risky move, it creates opportunities for both buyers and sellers. Yet, not all brands are experiencing this wave of inventory in the same way. In fact, the market is sharply divided between the winners and the strugglers. Toyota and Lexus are clear standouts, with their cars flying off lots in record time. Data from CarEdge shows these brands dominating the list of fastest-selling vehicles in 2025. A new Toyota Prius or Lexus RX might only stay unsold for 20 to 30 days before being snapped up. On the other hand, Stellantis, the parent company of Chrysler, Dodge, Jeep, and Ram, is facing a much different reality. Some of their 2024 models are still sitting on dealer lots, collecting dust and waiting for buyers who may never come. The struggle doesn't stop there. Nissan, Volkswagen, and luxury brands like Jaguar are also wrestling with bloated inventories. Some of their models linger unsold for 80, 90, or even 100 plus days, draining dealer resources and steadily losing value. One staggering statistic reveals that roughly 50,000 brand new 2023 vehicles remain unsold as we move deeper into 2025. That's right, cars built 2 years ago are still waiting for their first owners. For consumers, this dynamic means that shopping for a Toyota will likely involve paying close to full price, while buyers interested in a Chrysler 300 or Volkswagen Atlas could have significant negotiating leverage. Adding another layer of complexity is the regional divide shaping inventory trends. The market isn't uniform across the country. Instead, it resembles a patchwork quilt of supply and demand. In California, for instance, electric vehicles are stacking up on dealer lots. The state's early adopters have already filled their garages with EVs, leaving models like the Chevy Bolt.
It may not look like much, but the 2023 Chevrolet Bolt EUV is one of the greatest values on the road today.
Ford Mustang Mach-E.
This is the new Ford Mustang Mach-E. It is Ford's new electric car.
And even some Tesla rivals struggling to find buyers. Contrast that with Texas and much of the Southeast, where pickup trucks remain in hot demand. A Ford F-150 Lightning might sit untouched in San Francisco.
Is this thing more of an EV or a pickup? We bought this Ford F-150 Lightning about 2.5 years ago.
But the same truck would be gone in under 2 weeks in Dallas. In the Midwest, the story is shaped by the seasons. All-wheel drive SUVs vanish quickly during harsh winters, while rear-wheel drive sports cars and convertibles essentially hibernate until spring. Luxury cars add yet another twist. An $80,000 BMW might move briskly in New York City or Los Angeles, but could sit for months in a smaller market like Kansas City. Geography, lifestyle, and regional economics are all playing outsized roles in shaping today's auto market. Taken together, these trends paint a picture of an industry in flux. Inventory levels are rising, but not in a way that signals collapse. Rather, they highlight automakers' determination to stay ahead of demand. Some brands continue to thrive, others are struggling to adapt, and regional dynamics are creating pockets of both scarcity and abundance. For buyers, the message is clear. Depending on where you live and what brand you're considering, you could either be paying top dollar or walking away with a deal of a lifetime. Cracking the car market code. How to save big in 2025. When it comes to buying a car in today's market, timing, strategy, and understanding dealer behavior can mean the difference between overpaying and scoring a deal worth thousands. With unsold inventory piling up across the US, shoppers are in a unique position to leverage industry dynamics for their wallets. Let's break down what this really means for you. First, timing is everything. Leftover 2023 models sitting on lots present golden opportunities. According to CarEdge, buyers should aim for at least 20% off MSRP on these vehicles. Anything less, and you're shouldering too much of the depreciation hit the moment you drive off the lot. But here's a trick that seasoned shoppers know. Sometimes the best bargains aren't on the oldest models. A 2024 vehicle that's been sitting for 6 months may offer more incentives than a fresh, leftover 2023. Manufacturers, eager to move stagnant inventory, are reintroducing incentives in a big way. We're seeing low-interest financing, generous cash rebates, and even attractive lease deals making a comeback. Imagine last year's full-price vehicle now available with 0.9% APR financing and $3,000 in cash back. The sweet spot lies with struggling brands. Stellantis, for instance. A Dodge or Chrysler may not carry the same prestige as a Toyota or Honda, but buyers could save $8,000 to $12,000 on comparable models. That's no small change. Meanwhile, certified pre-owned luxury cars are another sleeper option. A 2-year-old Audi with warranty protection might cost the same as a new Nissan, delivering better features and craftsmanship for your dollar. Now, let's pull back the curtain on dealers themselves, because understanding their financial reality can give buyers even more leverage. Every vehicle sitting on a lot costs the dealer money. Literally, dealers pay what's called floor plan interest, essentially a carrying charge for each unsold car. If a vehicle sits for 90 days, the dealer could be paying $500 or more just in interest. That cost motivates them to sell, often at slimmer margins. But it doesn't stop there. Dealers are also chasing monthly, quarterly, and yearly sales targets tied to lucrative manufacturer bonuses. A dealer who falls short risks losing out on tens of thousands in incentive payouts. That's why end-of-month or end-of-quarter shopping trips can yield stunning deals. In some cases, dealers might willingly take a $2,000 loss on a single sale just to unlock a $50,000 bonus from the manufacturer. It's high-stakes poker, and if you know when and where to play, you can walk away the winner. The trick? Read the room. A lot stacked with 200 vehicles signals desperation. A smaller inventory of 50 suggests the dealer can be choosier. Shop where they need you most. Of course, no discussion of today's car market is complete without addressing the electric vehicle surge and slowdown. EVs exploded in popularity over the past few years, but 2024 revealed signs of cooling.
It's the most common criticism we get about electric vehicles. They just take too long to charge.
Sales grew 10%, but the pace is slowing as the market moves beyond early adopters into the tougher mainstream buyer phase. Analysts call this the chasm, and right now, automakers are working hard to bridge it. The result is EV inventories growing faster than their gas-powered counterparts. Remember when a Tesla Model 3 had a 6-month waiting list in 2022?
Today we are comparing a 2019 Standard Range Plus Tesla Model 3 to a new 2022 rear-wheel drive Model 3.
Today, you can likely drive one off the lot immediately. Ford has slashed prices and boosted incentives for the F-150 Lightning and Mustang Mach-E.
Well, all anyone can talk about is tariffs crashing the market like you see here. F-150s, almost 60,000 F-150s for sale.
Both of which were once impossible to get. The same story is playing out across multiple brands. Rebates, low-rate financing, and plenty of stock on dealer lots. Interestingly, used EV values are beginning to stabilize. A 2-year-old Tesla Model S,
which is the Tesla Model S Plaid. I put 30,000 miles on this car right here, which is a lot,
is no longer plummeting in price like it did a year ago. The market is finding balance, which is good news for buyers worried about rapid depreciation. For anyone curious about going electric, now may be the best time in history to make the leap. Lower prices, abundant inventory, and flexible financing make EV ownership more accessible than ever. In short, the car market in 2025 is a battlefield of opportunity. Whether you're hunting for a leftover gas model, eyeing a bargain luxury CPO, or ready to plug into the EV revolution, smart shoppers who understand timing, dealer incentives, and brand performance can save thousands. The game has shifted. If you know how to play, the next car you buy could be your biggest win yet. What's coming in 2025? So what does the rest of 2025 look like? Buckle up, because it's going to be a wild ride. S&P Global predicts worldwide vehicle sales will hit 89.6 million units in 2025. That sounds huge, but it's only a modest increase from 2024. The growth is slowing down. Interest rates are expected to drop throughout 2025, which should help sales, but it's not going to be the dramatic boost some people expect. Car prices are still way too high for many buyers, even with lower interest rates. Here's what I think happens. The inventory buildup continues through the first half of 2025, especially for slower-selling brands. Then, manufacturers start cutting production, and by late 2025, we might see inventory levels drop back to more normal ranges. For buyers, this means the next 6 months could be the sweet spot. Maximum inventory, desperate dealers, and improving financing options. After that, the window might start closing. The manufacturing crisis. Here's something the mainstream media isn't talking about enough. Several car plants in Europe and North America could face closures or sales in 2025 as automakers grapple with overcapacity. We're not just dealing with too many cars, we're dealing with too many factories. Stellantis is closing their Vauxhall Luton plant, affecting 1,100 jobs, and this is just the beginning. Gartner expects automakers to cut production capacity on 2 continents in 2025 because they simply can't justify keeping all these facilities running at 50 to 60% capacity. Think about the math here. When a factory is designed to build 300,000 cars per year, but only produces 150,000, every single vehicle coming off that line costs way more to manufacture. The fixed costs of running the plant, the electricity, the workers, the equipment maintenance get spread across fewer units. Plant shutdowns could cause an additional 410,000 jobs to be lost when you factor in all the suppliers and supporting businesses. This isn't just about car companies.
The 2-second barrier, if you will. No production car has ever done 0 to 60 in under 2 seconds.
Entire communities are built around these manufacturing plants. But here's the twist. This consolidation might actually be good news for car buyers in the medium term. When manufacturers close inefficient plants and focus production on their most profitable models, it often leads to better build quality and more competitive pricing on the vehicles that remain in production. The companies that survive this shakeout will be leaner, more efficient, and better positioned to offer competitive prices. It's painful in the short term, but it's exactly what the industry needs to get healthy again. The leasing revolution. Leasing is making a strong comeback after nearly disappearing during the inventory shortage years. With manufacturers now facing an oversupply of cars, they're eager to move vehicles off lots, even if it means artificially inflating residual values to offer attractive monthly payments. That's why deals like a 2025 Audi Q4 e-tron for just $299 a month are possible, compared to $600+ only a few years ago. For consumers who love driving newer cars and upgrading frequently, this may be the most favorable leasing environment in over a decade. But the flip side of these enticing deals is a reduction in lease maturities. Compared to 2023, there's an 11% decline this year, with another 22% drop expected in 2025. That means fewer 3-year-old lease returns are cycling back into the used car market, tightening supply and keeping used car prices higher than expected. Even though the average used car price has come down from its pandemic peak, it still sits at $25,512 in September 2025, historically elevated levels. This dynamic creates both challenges and opportunities for shoppers. On one hand, buyers seeking a 2- or 4-year-old used car may find better value in purchasing new, thanks to strong incentives and only a small monthly payment gap compared to used options. On the other hand, certain segments of the used market are offering unique deals, especially where owners are stuck with negative equity. Luxury car buyers from 2022 are now underwater, owing more on their vehicles than they're worth, which can create negotiation leverage for cash buyers. Electric vehicles and fleet cars add another layer of intrigue. EVs, in particular, are seeing steep depreciation, with some Teslas losing $20,000 in value in just 2 years. Bad news for original owners, but a huge opportunity for buyers looking for value.
Global automotive industry and an upstate facility is showing us its new technology to advance the future of electric vehicles.
Meanwhile, rental and corporate fleets are releasing well-maintained, high-mileage vehicles that often represent the best bang for your buck. Together, these trends highlight a paradoxical market. Plenty of new car supply, but a tightening used car segment, creating one of the most complex but opportunity-rich automotive landscapes in years. The China factor. We can't have an honest conversation about the global car market without talking about the massive elephant in the room, China's dominance in vehicle manufacturing and the ripple effects it's causing worldwide. Chinese automakers aren't just building cars for their domestic market anymore, they're building them for export, and they're doing it at price points that make traditional automakers nervous. When a decent electric sedan costs $15,000 in China, it puts enormous pressure on everyone else. The recent increase in import tariffs on Chinese EVs imposed by the US and the EU is likely to exacerbate overcapacity issues. Chinese manufacturers might set up factories in places like Morocco or Turkey to get around these tariffs, which means even more global manufacturing capacity. But here's the part that affects American car buyers directly. Chinese competition is forcing American manufacturers to be more aggressive with pricing and features. That loaded Chevy Equinox with all the tech features for $28,000? 10 years ago, that same feature set would have cost you $45,000 in a luxury vehicle. The technology transfer is happening faster than most people realize. Chinese companies aren't just copying Western designs anymore. They're innovating in areas like battery technology, autonomous driving software, and manufacturing efficiency. For consumers, this ultimately means more choices, better technology, and competitive pricing. But it also means more uncertainty for traditional automakers, which translates to more aggressive deals as they fight to maintain market share. Chinese brands like BYD are already making moves into markets like Mexico and South America. It's only a matter of time before they find ways to compete directly in the US market, either through partnerships or manufacturing facilities. The technology disruption. One factor that's contributing to the inventory buildup is the rapid pace of automotive technology change. Cars that were modern 2 years ago now feel outdated compared to what's rolling off assembly lines today. This technology disruption is creating clear winners and losers in the market. Tesla, for all its controversies, still has a significant technology advantage in areas like over-the-air updates, charging infrastructure integration, and autonomous driving features.
And then the design, we've obviously made a lot of refinements to the exterior. So I think once you drive the new Model S.
Traditional luxury brands like Mercedes, BMW, and Audi are fighting back with impressive tech packages, but they're also dealing with the reality that a $30,000 Hyundai now has features that were exclusive to $80,000 cars just 5 years ago. For buyers, this creates some interesting dynamics. If you're not particularly tech-savvy, you might find incredible value in a 2023 model that's technologically outdated but still perfectly functional. We're talking about cars with excellent build quality, proven reliability, and all the features most people actually use, available at significant discounts. On the flip side, if you're someone who wants the latest and greatest technology, the rapid pace of innovation means you might want to consider leasing instead of buying. That way, you can upgrade every few years without taking a massive depreciation hit. The autonomous driving race is particularly interesting to watch.
Lucid makes some really bold claims for this car's performance. Is it quick? Ooh, that wasn't quite what I was expecting.
Every manufacturer is promising level 4 autonomy soon. But the reality is that we're probably still 3 to 5 years away from anything truly game-changing in most markets. Infotainment systems are another area where rapid change is making older cars feel dated quickly. A 2022 car with a slow, clunky infotainment system feels ancient compared to 2025 models with lightning-fast processors and seamless smartphone integration. But here's something interesting. Some of the most reliable cars on the market are those with simpler technology packages. That 2024 Toyota Camry with basic infotainment might not wow you with tech features, but it's probably going to run for 200,000 miles without major issues. So here's the bottom line. Yes, there are tons of unsold cars out there right now, but this is not some market apocalypse. It's actually the best car buying environment we've seen in years. Nearly 3 million vehicles in inventory means choices, competition, and deals for smart shoppers who know how to navigate this market. What's your take on all this? Are you planning to take advantage of this inventory build-up, or are you waiting to see what happens next? Drop your thoughts in the comments below. I read every single one.